Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Welcome back to On the Money here on WDBO, AM 580, always streaming inside your WDBO app. We got Rodney Ownby, we got Joe Bert here taking your calls, here answering your questions, helping you get to and through retirement with the Certified Financial Group. If you want to call in, 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. We got Lee calling in from Altamont. Go ahead, Lee. You're on the air.
Morning, Lee.
Hey, Lee.
Hello, Lee.
How you guys doing today?
Good. How are you? Thanks for your call. What's up?
Well, I have a question. It's a little bit in the weeds. It's about a Roth IRA tax versus a traditional tax with a conversion. So I understand if I fund my Roth IRA, I have to pay income tax of about 24%, and then I also have to pay Social Security tax and Medicare tax, and it all adds up to about 31%. And if I fund my traditional IRA, I don't have to pay any of that. My question is, if I fund my traditional IRA and then I convert it to a Roth IRA, do I have to pay the 24% tax, or do I have to pay the full 31% tax?
So what you're saying, I see what you're saying. Let's back up for our listeners of what you're trying to do here and be sure we understand it here. So you're saying what we know is that in order to put $1 into an IRA, a Roth IRA, you've got to pay taxes on it. And if it's coming out of your paycheck, you've got to pay taxes on it, and you got to pay FICA and all the other stuff that goes with it. So you're right. You have a lot of taxes before you have that $1 to put into the Roth. We right so far?
Correct.
Okay.
Agreed.
Okay. If you put the money into a regular IRA, you're going to get a tax deduction for the money that you put in. However, you're not going to save anything on FICA taxes. Right, Rodney? Right. I would think, yeah. Because, you're not going to save anything on FICA taxes. Same thing with you if it goes through your 401k. You're going to save on federal income taxes, but not on Social Security taxes. So the question is now you've got the money that you put into your IRA with pre-tax money. So let's say you're in a 22% tax bracket. So you just save 22 cents. So it only costs you 78 cents to put it into the IRA. You can then take that money and put it into a Roth. However, when you do that, you've got to pay taxes on that conversion. But you don't pay FICA taxes. You're just going to pay regular income taxes. Am I right, Rodney?
In this example, the
right,
24%.
In this example, yes.
24%.
24%, yes. Does that make sense?
Yes. I guess what I didn't understand is that I'm not saving the FICA upfront when I fund the tradition.
Yeah, because just think about it. Because if are you self-employed, or you having a W-2 income?
W-2 income.
Okay, so when you get that $1 that shows up in your paycheck that you can spend, all the taxes have been withheld on that, and if not enough has been withheld, you have to pay extra income tax. But you know that the FICA taxes that come out of your paycheck to end up with that $1.
Okay, understood.
Okay.
So it sounds like there's really no savings in taxes or FICA or any of that by doing a backdoor IRA, Roth IRA conversion.
Well, that's a whole backdoor Roth is a whole other element. That's for people that aren't eligible to do Roth.
Income limits.
Sure. Right. Yeah, I like your thinking. I mean, thinking is all the way through, but the bottom line is you don't save anything on FICA taxes by doing a Roth or a regular traditional IRA. You gotta pay Uncle Sam the taxes, but the FICA taxes one way or another.
Okay, understood. Well, thanks for the advice. I appreciate it.
You're welcome, Lee. We appreciate your call. Have a great weekend.
Thanks, Lee.
Yes, and just as a reminder, we have off the air is Dave Balakrishnan, right? Taking calls off the air. Yep. So Dave is taking calls. If you have any questions, want to explore a bit more on Roths and so forth, you can reach him at our offices right now at 407-869-9800, 407-869-9800. And aside from the workshop next Saturday, we're doing live at Village on the Green. What's after that, Rodney? Do you have a schedule on that?
Yes. So March 19th, Social Security Planning, Basic Rules, and Claiming Strategies is hosted by Charles Curry. March 19th from 6:30 to 8 p.m. That's a Wednesday evening
here
in the office.
So once again, if Social Security planning or taxes on your IRA, 401k, and so forth, that's next Saturday. Go to our website. That's financialgroup.com. Click on events. You can make your reservations right there and hope to see you this Saturday, or if not then, a week from Wednesday, right here in offices. Take it away, Josh.
Thank you so much, Lee, for calling in, giving that great questions. I'm sure somebody else in the area was able to learn a little bit from your inquiry as well. If you want to talk to Joe and Rodney from the Certified Financial Group, we got open lines at 844-580-9326. That's 844-580-WDBO, or feel free to send in your question using the open mic feature inside the free WDBO app. You're listening to On the Money, where we're planning today with the Certified Financial Group.
More than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust.
Welcome back to On the Money here on WDBO, AM 580, always streaming inside your WDBO app. This is your chance to hop on the air. Just pretend, you're at Thanksgiving dinner and you've been hearing in the news if the Social Security is going to be happening or 401k, what's going on with the market. This is your chance to hop on the air and pick the brains of that accountant friend you have. Because right now that accountant friend is WDBO's accounting and certified financial advisors, the Certified Financial Group. Joe Bert and Rodney Ownby on the air today answering your questions. If you want to call in, the number to call, 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. Joe, Rodney, what do you say we hit one of these text questions?
I think it's time. Let's do it.
All right. We got one here from Seth, and Seth wants to know, to provide a frame of reference, what has the Buffett ratio been during recent critical points in history for the markets?
Oh, Seth has been paying attention here.
That's right. So if you look at just before the dot-com bubble, so you're looking like 1999 timeframe,
right,
it was very high. It was over 150.
Well, let's for our listeners that just might be tuning in, let's revisit what the Buffett ratio is.
So the Buffett ratio attempts to give us a sense of whether stocks are overvalued, in this case, U.S. stocks. So it looks at total U.S. stock valuation based on aggregate stock prices of all the stocks combined in the United States and divides by gross domestic product, which is the total production of goods and services from the United States in a one-year period.
Got it. So you take the value of all the stock that's a U.S. stock, domestic stock, small cap, large cap, mid cap, growth, value, whatever.
Right, real estate, everything.
Real estate,
right,
and then you divide it by the GDP.
Correct.
And if it's a 1-to-1 ratio,
then things should be on track in theory, right?
Pretty much
and
in line.
Like we talked about, the stock prices may, in anticipation of growth of GDP, may run a little bit ahead.
Sure.
So historical run rate, you're looking at maybe 120, 120% in that range.
Got it. And during the dot-com, it was what?
It was 150,
Buck and a
just in
half.
excess of 150,
All right.
150%. So
And right now it's at
right now it's at 200.
Ooh, okay.
And we talked about some things that mitigate that. So
Right.
More globalization, monetary policy in the post-pandemic world may have diminished the value of this a little bit.
Got it.
But it still at least gives us an indication that the stock market may be overvalued.
Right. And getting back to Seth's question, which was
historically, just to provide sort of a frame of reference, what does it look like?
Okay.
So again, dot-com bubble, 150%. So it's high, indicative of an overvalued stock market, right?
Got it. U.S. stock market.
U.S. stocks, exactly.
right.
We're looking at U.S. GDP,
Yes,
U.S. Valuations of stocks.
Got it.
And then in 2000, in the bust of the dot-com bubble, it fell below 100%.
Right.
Just below 100%.
Right.
And then an even better example is the 2008, 2009 timeframe.
Mm-hmm.
So in 2008, it was, again, significantly in the 150 range, well above 100%.
Mm-hmm.
And then in 2009, of course, was it February, I believe March, when some of the big...
March 9th, 2009. I remember it well.
You remember exactly
I remember
where
it
you
well.
are, right?
Yep.
It was actually fell below 50%.
Mm-hmm.
So I'm sure you remember people talking about the fact that if you had the nerve, there were some bargains out there, right?
Mm-hmm.
So that's below 50%, I think, is certainly indicative of the fact that there were some bargains to be had in the U.S. stocks at that point.
Yeah. I think the important thing to keep in mind, though, is really what's driving current valuations, and that's really what's making up the big part of the S&P 500 valuations right now. It's your tech stocks. It's your large growth stocks that is driving it.
Right.
However, that being said, there's a lot of opportunity underlying companies that are still doing well, providing dividends, still growing, that are valued reasonably. And this is where knowing what you're doing and not just focusing on the market as a whole, because if you look at the market as a whole, it's grossly overvalued. That doesn't mean that you should not be in the market. The idea is that what you want to do is find the opportunities, the things that are undervalued at the moment. And that gets back to, hopefully we answered Seth's question. Right.
Well, and to expound on what you just said, the Magnificent Seven, so these tech growth companies, last time I looked, were 35% of the S&P 500 in terms of valuation, but more like 21 or 22% of the earnings.
Right.
So there's a disconnect there.
Right.
But then if you look at an index that's equal weighted across the entire S&P 500, you're going to get equal exposure. You're going to reduce your exposure to those potentially overvalued tech companies and get overall exposure equally to all the 500 companies that comprise
Exactly.
the S&P 500.
Exactly. All right, Josh, I see we got a call up. You want to tee it up?
You got it. If you want to join the conversation, we got some more open lines at 844-580-9326, 844-580-WDBO. We got Tamala calling in from Orlando. Go ahead, Tamala.
Tamala, good morning. Is it Tamala or Tamala? Or is it anything? You are there.
It doesn't matter.
Okay.
Thank you.
Okay.
I had two quick questions if you don't have time for both. The one stirred up when the other fellow was calling about the difference between, like, you talked about FICA and all this.
Mm-hmm.
I see there's three things that come out of my paycheck. It's called TX withholding, TXEE Social Security tax, and TXEE Medicare tax. I thought the withholding was FICA. What is FICA?
That is the Social Security. That's the Medicare
Medicare, right.
tax. Mm-hmm.
What does FICA stand for? Just curiosity.
Federal insurance.
That indicates Medicare.
Yeah, I can't tell you off the top of my head, but I will tell you at the break.
Okay, it's not a big deal.
But that's
So when I'm,
I used to know that stuff back in the day. Go ahead. Go ahead.
Yes, when I'm figuring out what my tax rate is, for the purposes of, basically, I did a rollover IRA. I took a distribution. I know I'm going to pay taxes, and I want to hold them back.
Mm-hmm.
And I'm, I don't make a ton of money. I make a little under $40,000,
Mm-hmm.
shamefully. But anyway, and I was kind of thinking I was around the 12% tax bracket, so I was going to hold out like 15% just to be. But will I get taxed? They'll take out the Medicare, the Security, and the withholding, right?
Yes.
On that.
Yes.
All three of those.
Yes.
So I need to figure out what my tax rate is, right?
Yes. Now, so are you single? Are you single?
Yes.
Okay, so let me tell you where you fall. Now, once again, this is not, people get confused with what your tax rate is because they look at what their income is. It has nothing to do, you don't base your tax rate on what your gross income is. What you want to look at is what your taxable income is, and that's after your exemptions. Okay. So you are, based on what you just told me, you are going to be in the 12% tax bracket, probably.
Okay, that's what I thought. So how do I know what would not be taxable income? And because I take a standard deduction, I don't do itemized deductions. I have a home, I own it, all that stuff.
Right. So so you're going to get the standard deduction. The standard deduction for you is $15,000. All right, so you take that right off the top. So you're going to be in the 12% tax bracket.
Okay, so that would be a safe thing to do.
Yes.
And then that's really not the question I called about, but I thought about that when the fellow said that, but I did not know what FICA was.
Yes.
But anyway, thank you for clarifying that. And then the second question is, I had a workers' comp case at my job. I was there 10 years, but I separated January 27th.
Uh-huh.
And they're going to do a settlement with me.
Okay.
Give me a settlement to get me off the workers' comp.
Okay.
I didn't know anything about this. I kind of thought the workers' comp disappeared, but they say, no, it doesn't. It's for life. But I'm at a maximum improvement or whatever. And so
you mean the
payment that I get, is that taxable?
The workers' comp payment that you're receiving?
Do I know how much?
No, I said that what you meant is it's for life. What you're saying is you're going to get a payment for the rest of your life.
No, I don't mean that. What I'm saying is if I don't do a settlement, I will be tied into the workers' comp for the rest of my life.
Okay, gotcha.
They don't doesn't, I thought it just disappeared.
Gotcha.
I'm not there anymore. They're not going to cover me, but that's not true. So the people at corporate told me that they would do a settlement, and they're working on that. And so the settlement, my question is that considered income? Because I lost my job, actually, and so I'm job hunting, but I'm considering not being full-time. I've always been full-time and possibly taking Medicare. Social Security, but I'm trying to figure that out. I don't want to take it, but anyway, I'm wondering if the settlement, let's go back to the question, is income, will be income.
No, it shouldn't be, right?
It's not considered income.
No, so it can be taxable to you.
Okay. That's great. But the distribution, of course, because I took the distribution off the rollover to get me through some hard times right now.
Yes.
That is just taxable at my regular rate.
Yes.
Roughly 12%.
Yes.
So if I hold 15% back, I would be safe.
Rodney's got something here.
How old are you?
60. I'll be 63 the end of March.
So just your ordinary tax rate.
Right.
Okay.
And we got the definition.
Ordinary tax due.
Go ahead.
Okay.
Ordinary tax
due in 20.
Yes.
It'll be due in 2026. I just got the distribution 2 days ago.
Yes, that's right.
And I cashed the check.
That's right.
So it won't be due till next April.
That's correct.
Right.
because I just don't want any surprises. I'm saving that money, and I don't want any surprises. I just want to make sure I'm holding enough. I'm going to do 15% as wiggle room just in case.
Right. You're okay.
Yeah, that's a good idea.
I think that's it.
Oh,
Your show was so helpful.
Oh,
yeah,
thank
go ahead.
you. I was going to tell you, Federal Insurance Contributions Act is what FICA stands for, and it encompasses Social Security and Medicare, and it's 6.2% is Social Security, 1.45 is the employee share of Medicare. That's doubled because the employer pays that, matches that, right?
Right.
And Social Security is 4 point something, you said?
6.2% is Social Security, and then 1.45% is to cover Medicare. So
And then the balance of the 12%, you would add that up to get to the 12% taken out.
Exactly.
So that's like 8%, almost 8% right there. I did notice, real quick, I know you got to go. If you got to go, you got to go. I noticed several years ago, because I do look at my pay stubs, and I've been working since I was 15-year-old paying, because I worked all the way through college, not full-time, of course, but I did work a lot. I'm retired and all that kind of stuff from nursing, and I'm doing a different job now. But anyhow, I've noticed over time, I would say maybe the last 4 or 5 years, used to be that withholding was double the Social Security. Now that I see Social Security is more than double the withholding in what they take out. What's up with that?
Well, I don't know. You must have adjusted your withholding, because you can adjust how many exemptions you claim.
Never.
Well,
I've never adjusted it.
I don't know any.
It's one,
I'd have to
and
look
that's
at
it. Even when I had kids, I just took out one because I wanted all the money to be taken out. I don't want to be surprised.
Right.
But I did notice it kind of flipped. I thought because I know that Social Security has been wasted, and who knows, even me at 63, if it's going to be available. That's why I'm debating taking it or not. But I don't know. Who knows?
I can't answer that. Can't answer that question for you, Tamala.
It will be there. It may be a reduced amount, but it will be there in some form. Social Security.
So it's the Federal Insurance
Contributions Act.
Contributions Act. I knew I had half of it. I had federal insurance. I didn't know
Well,
what
it's interesting to
contributions.
call it a contribution when I'm making the contribution, right? You think it's amazing to see. And then I guess when I pay, when I get the Social Security, they tax the Social Security too, right?
I can be subject to taxation depending on your income. Yes, that's correct.
Potentially.
Yes.
Because I know they take back $1 for every two if you go over like 22.4 or something like that. Is that what they're calling the tax?
No.
Or is there something on top of that?
That's a offset. You get it's not a tax. It's an offset. They withhold it if you earn so much over the threshold before your full retirement age.
Yeah, if you draw before full retirement age.
Right. Yeah. That's
exactly. So before 67, I can't make more than 22.4, I believe, and they'll take back one for every two. Is that what you're calling tax? Security tax?
No.
Well, what's the Social Security tax?
Then it's going to be taxable. You'll have to pay taxes on depending on your income. You'll have to pay taxes on up to 85% of your Social Security. At one time, before in 1974, Social Security was totally tax free. A lot of people forget that.
Yeah.
And that was the good old days. And that's what President Trump is trying to bring back. Yeah. So anyway, but yes, you may be subject to taxation on your Social Security when you retire, depending on your income level. But you can call back and we'll figure it out for you, Tamala.
Thank you so much.
Thanks for the call.
I just love conversations like that because she called in with one question, but as she learned more and more from you two, she's like, wait a minute, I have new information, I have new questions, and that's just the beauty of this show and the beauty of talking with certified financial planners with the Certified Financial Group. We got one more segment coming up. If you want to call in, 844-580-9326, or we have Dave Balakrishnan standing by off the air inside the office of the Certified Financial Group at 407-869-9800, 407-869-9800. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, "Hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like?" And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
On WDBO AM 580, always streaming inside your WDBO app. If you want to join the conversation, we got about 3 minutes left, so I'm going to give you a different number to write down. And to be honest, this number should just be saved in your phone 24/7. That is the Office to Certified Financial Group. We have Dave Balakrishnan currently taking calls off the air, and he'll be answering your calls for a few minutes as this show comes to a close. Dave Balakrishnan's at 407-869-9800. 407-869-9800. And we got Rodney Ownby and Joe Bert here wrapping up another great hour of radio magic. And what do you say we hit one more text question, guys?
Let's do it.
All right. We got Douglas who wants to know, Rodney, Joe, what's happening to cause my defense industry and technology stocks to decline in these last couple of weeks?
What do you think, Rodney?
So the technology we talked about a little earlier about a lot of these stocks are overvalued, and there's uncertainty in the market. So that volatility is going to tend to make those stocks go down.
Right.
That uncertainty around economic policy, tariffs, all those things, it bumped up against a stock that's already overvalued is going to cause on down days it's going to cause those stocks to be more sensitive. And then defense, similar, but also this, Doge is talking about significant cuts to the defense budget, and that's affected a lot of defense stocks that have run up here over the last 3 or 4 years.
There you go. Hope that answers the questions. So let's wrap up here, Josh. Coming up next week, we've got a workshop scheduled at Village on the Green, my new home up here in Longwood. Continuous Retirement Care Community. Hope to see our listeners there. We're going to do the program live right from there at 9 o'clock. Then stick around at 10 o'clock. Gary Abley will be doing his strategies on taking money out of your IRA, your 401k, your 457, what you need to look for, Roth conversions, all that stuff and more. He'll be covering that from 10 to 11:30. And then 11:30, stick around and have lunch with me. Once again, on the house. We hope to see you there next Saturday morning. If you want more information about that and want to make a reservation, you need to go to our website. That's financialgroup.com, financialgroup.com. If you click on events, you can make your reservation right there. It's filling up fast. Hope to see you there. And once again, we do these absolutely free. And people say, why do you do this, Joe? We do it for basically 2 reasons. Number one, hopefully to prevent you from becoming a financial casualty. And number 2, to introduce you what Rodney and I and the 14 other certified financial planners do for our clients, providing retirement planning and investment management for a fee. However, on Saturday morning, as we said, we do it for free, and we do these workshops for free and introduce you to our firm and hopefully someday have an opportunity to earn your business. So that's what we do. Anything else you want to say, Ron? Been good being with you, talking about the Buffett,
Likewise.
The Buffett ratio.
More to come next week.
More to come next week with
Part
Gary.
2.
Part 2. You'll need to stay tuned for that if you can't make it to my radio program live next Saturday. But stay tuned, and we hope to see you then. And I see we're up against the end of the program here, Josh, so take it away.
That's right, guys. Thank you so much for another great hour of financial advising. Again, we got Dave Balakrishnan with the Certified Financial Group. He is a certified financial planner. That's the good thing about working with the Certified Financial Group. Everybody you talk to, well, except me, but I'm just a radio guy. Everybody you talk to inside that office is a certified financial planner, and they will be guiding you to and through your retirement. Dave Balakrishnan will take your calls off the air right now. 407-869-9800. 407-869-9800. Thank you so much for listening to On the Money, where we're helping you plan tomorrow
today
with the Certified Financial Group.